Well, first, I'd like to echo what you said. We Swedes, we like our formal white ties, so thank you for that comment. I would say it like this. The first quarter this year was, a story of two tales. It was a horror story and a fairy tale, where April was really a shock to the system, where we were airing and breathing a little bit of optimism at the end of Q1, and then we had the whole kind of influx of new news around tariffs. Thereafter, May and June was really an impressive recovery. Therefore, I get a little bit nervous to say, is this the new dawn? Or was this a little bit of a natural recovery from a very slow month of April? But you can really see that the end of the quarter looks much better, both in activity when it comes to investment banking, ECM, DCM, structured finance, lending. Also, demand for broad-based lending growth was introduced for the first time in several quarters, and also a healthy net inflow of asset under management. So we think we are getting close to, let's call it, the end of this normalization. Rates coming down, as you correctly pointed out. We had a huge tailwind when rates went up. Now we are actually lower, even though we have a solid result this quarter compared to expectations. It's still lower than last year. And we think we are getting very close to a normalization where things will be entering into a more transitionary period, sideline movement, before we take the next step.
Johan, I mean, you mentioned Riksbank there as well. Have they got more work to do, or are we actually at the right rate now to provide that platform and that lift off for the economy, or do you expect one or two more cuts?
I think we are debating this or one more. It's moving around all the time. I got to go with my macroeconomists. Normally, we would wait 6 to 9 months before you really get the uptick from the benefit of monetary easing. But we do have this unknown right now around geopolitical risks. Why are households, this is the weakest point in our report and in the economy, it's looking very good on corporate investment banking, but consumption-led banking is very weak. So we had no contribution from payments, credit cards, those things that so heavily correlate with consumer confidence. We also see savings ratios coming up again. So it's obvious that households are cautious. And before that comes into a different light, I don't think we will see meaningful broad-based investment and therefore larger loan demand. What happened in Q2 for us was really the investment bank firing on all cylinders, because there is so much pent-up demand to refinance loans. We did several new IPOs, new listings, capital raisings, etc.
Johan, let me ask you about the impact of the Swedish Krona. It's one of the best performing currencies this year. What's that meant for SEB, and what's it mean? What has it meant for the broader Swedish economy?
Yeah, isn't that an unusual comment over the last decade? But yes, it's unusual. I think that it's very, very good in the holistic macroeconomic perspective. We have eroded the real wealth of the Swedish population for decades, as the krona has had this very modest but continuous depreciation trend. That has helped in the short run, the export industry, and of course SEB is a big exporter of financial services, so it also helped us. But I think it's very, very good that we start stabilizing the krona. Now it has appreciated a bit in order to protect the real wealth, and then also make sure that you don't hide competitive disadvantages by a weaker currency, because that's not long-term sustainable. You need to have that normal pressure for any business to perform in its own right, not only benefit from depreciation of your currency.